Going over the trades on the day, minus 81.05 hypotheticals, minus 72.50 in real trading. We did better based on slippage. Around the live and the hypotheticals were around the same on the micros, trading two micros in the 50K portfolio. And our live results are about plus 650 on the month. We started late in a month during a drawdown, and we haven't made much progress yet. The market has been very congested on the day trade. And the hypotheticals on the month are minus 52.12. We're ahead by about 5,800. The hypothetical end-of-day drawdown is minus 13,135. We gave back a lot of the gains from yesterday, and so disappointed in that. We talked about the FOMC minutes at the beginning of the day, and we are not trading during FOMC meeting, but the minutes, which come out 3 weeks after the meeting, we are scheduled to trade, and so we've talked about not trading on those days before. We've talked about not trading on CPI before. But right now, our pre-planned approach was to wait for a drawdown, not trade on any FOMC meeting days, but to trade on FOMC minutes. I might rethink that going forward. It's interesting that the minutes are such an event. I honestly think that today's volatility, and this is a normal daily P&L, so it's not a huge, it's a down day. So even if we trade normally, we have plus or minus days like this on any given day. And so yesterday was, for example, a plus 8K day. Today's minus 72.50. Those are normal daily P&Ls on the larger side. But today, a lot of chop, and I think a lot of this has to do mainly with fighting yesterday's sell-off. And so I've never seen a market fight the downside this much. Yesterday was interesting because I thought it was going to prop it up here and continue to sell off a little bit into the close. Not a big sell-off. We haven't had any panic selling or accelerated selling, but I was surprised to see the market follow through in the selling yesterday like it did. And so that was a good sign as far as trends are concerned and follow-through trades. We're used to seeing the market going up and then rolling over, selling off, and then rallying, no follow-through. And it was propped up on Friday. So Monday was a holiday. Tuesday's trade, there was follow-through. And markets tend to, last Thursday the market rolled over. Last Friday the market rolled over. Then Tuesday the market trended. And, I would anticipate follow-through trends. Markets tend to follow patterns and cycles. So if it's counter-trend or reversal type patterns, then you see that a lot. We've had a lot of reversal patterns. And we saw a trend pattern, and I thought we were due for more trend because number one, because we haven't seen one in a while, not many trendy days, and number two, because we did have one yesterday, so the cycle was moving towards trends, and so we have not had a lot of trends, and so, but it ended up being a massively choppy day. The bulls were in control early, took out the lows, rallied, and then just massive chop into the close. Let's look at the 24-hour session on this. So here is the Nasdaq 24-hour session. We continue to see that divergent pattern where here is yesterday's close. It goes up, it takes out the lows, comes up, takes out the highs again, takes out the lows, takes out the highs, and I think the script it would have supposed to have taken out the lows again if you continue this pattern, because you have this pattern where it continues to take out highs, lows, highs, propped up. And so bias to the upside still intraday. I did a study over the weekend, and if you just buy the day session open and sell the close, you're up since May, while overall the market is down since May. So it's very interesting, the day trade bias to go up, buy the dip, prop the market up, and that continues to remain. Let's look at the trades on the day. Let's collapse that. AT 2022 was off to a good trade early, then the market collapsed and then rallied. So AT 2022 and AT 2020 lost on the day. Viper was the trade of the day, 4 for 4, really in sync with the market. Made a lot of observations today, have a lot of ideas to test in this kind of market environment. So if we don't trade on FOMC or don't trade on FOMC minutes, maybe trade a different type of strategy on those days is an idea I've had, and some of you have also brought to my attention that something that I've actually already been working on And so I'll have more details on that if I come up with something conclusive. Tick count trend, tried to buy the dip, and almost hit the profit target. Came so close to the profit target, and then the market rolled over on the minutes. A lot of flashy movement in here during the minutes. Cobra 3 was working towards its profit target, came down here, hit its stop. The market continued down. Tick reversal, got short, got long. EVP1 got long at the end of the day. Momentum reversal, got short again. Second trade was a winner. Tick pulse, got long, stopped out. 2 for 9 on the trading strategies. Small profit on EVP, decent profit on Viper. S&P was 0 for 3. In general, we were 2 for 12 today. Just a really difficult trading day with lots of V reversals and choppy price action. And so, like I said, we're not scripted to just sit out on FOMC minutes, but in the future we may do that, as historically we typically trade through these economic events. And historically when we've tested these, the strategies tend to be profitable longer term over these economic events, Fed meetings, Fed minutes. But the last couple of years, since 2022, into 2021, you're starting to see a trend where there is more volatility around these events, to where they're almost never profitable, instead of sometimes profitable, sometimes not. So Cobra 3 down on the day, minus 625. Momentum reversal, got short, stopped out, got short again, profitable. Tick wave, lost on the long side. So just a sloppy day, giving back a lot of yesterday's gains, but still up on the month, plus 650, given a difficult month. Let's look at the monthly analysis as well. Let's look at the, it's interesting, the monthly analysis, because this is February 1. We had the FOMC meeting on February the 1st, and the market came down here, and then when Jay Powell spoke, the market rallied. And it's as if, they wanted to extend the January effect the first 2 days in February. So the first 2 days in February were the range for the entire month until today's session. Today's session took out the lows of February the 1st. And so we get the minutes. The minutes, we're right back here where we started on the FOMC day. The minutes are the exact same place as on the Nasdaq. Let's look at the S&P. Look at the S&P futures, lower than where the minutes were. If you look at the FOMC minutes in the February 1st, right here, where the flash moved down and then the rally. And then today, yesterday's session took out the February lows at the beginning of the month, and today there was some follow through, but just a choppy prop up, trying to prevent the market from going lower as the bulls come in and try to support this market and support the year. And be interesting to see what happens. I thought that they might take out these lows and then try to rally to the highs between now and the end of the month, but we'll see. It's still possible. I'm flat at the end of the day, and we just trade the trend, whether it's up or down intraday. And so based on the back and forth action in the market, wouldn't be surprised to see the market now reverse and try to go to the highs. And that would not be, in my opinion, that would not be bullish. That would just be indicative of more divergent price action in both directions. So once again, those are the trades on the day for Wednesday, February the 22nd, 2023. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.